Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Incannex Healthcare.
If you find our talks useful, please consider subscribe, like, and comment underneath. So jumping right into this one, I'm looking at the chart for this company today, and frankly, it looks a bit like a heart monitor during a panic attack. We've got massive volatility, a reverse stock split, and a pipeline involving, psychedelics and cannabinoids.
Yeah, it really does look chaotic on the surface. And for anyone watching the biotech sector this week, Incannex is probably the name flashing brightest in red across their screen. They're sitting right at that very dangerous but exciting intersection of high-risk clinical science and, frankly, a distressed financial valuation.
Distressed is, I think that's a very polite way to put it. But before we get into the financial engineering side of things, which is genuinely fascinating in a sort of train wreck way, let's ground ourselves in the actual business. Because when I see a company doing sleep apnea treatments and also magic mushrooms, I have to ask myself, is this a serious biopharma company or just a dispensary with a really good PR team?
Right. No, it's a completely fair question. But this is a legitimate clinical stage biopharmaceutical company. And clinical stage is really the operative word for you to understand here. They aren't selling commercial products yet. They're basically burning cash to prove their science works.
And the market cap right now is hovering around, what, $167.5 million?
Exactly. Which, depending on who you ask in the market, is either dirt cheap or wildly expensive for a company with practically no profits.
Yeah.
But let's look at why they actually exist. Their lead program is called IXHL42X. They are trying to solve obstructive sleep apnea.
Okay, sleep apnea. I mean, I know that's a massive problem. My uncle actually has it. He sleeps with one of those CPAP machines. You know, the mask, the hose, the noise that sounds like Darth Vader having an asthma attack right next to you in bed.
Yeah, the CPAP machine is the current standard of care. But here is the massive fundamental problem with it. People absolutely hate it. The adherence rates are just terrible across the board.
Oh.
Studies show that something like 30 to 50% of patients completely abandon CPAP therapy within the first year, just because it's so uncomfortable and intrusive.
Wow, 50%. So the market opportunity here is basically everyone who has that machine just sitting in their closet gathering dust.
Precisely. It is a multi-billion-dollar addressable market. Incannex is trying to replace that clunky machine with a simple pill.
A pill to stop your throat from closing up at night. I mean, that sounds like the holy grail for sleep medicine. But how does that actually work chemically? Because usually if you take a pill for sleep, it makes you sleep deeper, which relaxes the muscles more and makes the apnea even worse, right?
Usually, yes, that's exactly what happens. But this is a novel combination therapy. They have combined dronabinol and acetazolamide.
Okay, hold on. Dronabinol, that's synthetic THC, right? Like the active ingredient in cannabis. And acetazolamide, isn't that a diuretic? Like the stuff they give you for altitude sickness?
It is, yeah.
So you're telling me the cure for sleep apnea is getting high and needing to pee in the middle of the night?
Well, no, not quite. It's all about the specific dosage and the mechanism of action. See, dronabinol has actually been shown to increase muscle tone in the upper airway. It basically tightens the specific muscles that usually collapse and block your breathing during REM sleep.
Okay, I see. So it acts almost like a structural support for your throat.
Right. But dronabinol alone can be highly sedating, as you mentioned earlier. That's exactly where the acetazolamide comes in. It is a carbonic anhydrase inhibitor. In plain English, it slightly alters the pH balance in your blood, and that actually tricks your brain's respiratory center into thinking it needs to breathe more actively. It stabilizes your entire respiratory drive.
That's fascinating. So one drug essentially keeps the door open, and the other drug makes sure your brain remembers to walk through it.
That is a fantastic analogy, yes. And the data they got from their phase 2 REPO-SA trial was genuinely impressive. They saw reductions in the AHI, which is the apnea-hypopnea index, by up to 83% from the patient's baseline.
Wait, up to 83%. I always get a little suspicious when I hear the words up to in a press release. Was that just one lucky guy who had a really good night, or is this a consistent result?
It's totally fair to be skeptical. In the biotech world, up to can definitely do a lot of heavy lifting for bad data. But in this specific case, the results were both statistically and clinically significant across the entire patient cohort. The average reduction was substantial enough that they are moving very confidently into phase 3. And crucially, this is a fixed dose combination.
Meaning they've patented the specific ratio of these two generic drugs?
Exactly. That is their massive moat. Otherwise, any doctor could just prescribe the two generic pills separately and bypass the company entirely. They have patent protection on this specific formulation, potentially extending well into the 2040s. So if this actually works in phase 3, they essentially own the entire solution.
Okay, so that covers the sleep apnea side, which sounds incredibly promising.
hmm
But you mentioned earlier they aren't just a one-trick pony. We have to talk about the other side of the house, the anxiety program.
Right, their secondary pillar, program PSX-001. This is targeting generalized anxiety disorder using synthetic psilocybin.
Psilocybin, so magic mushrooms again. It really feels like every single biotech company is pivoting to psychedelics right now to catch the hype. Is this just them chasing a trend to boost the stock price?
It's certainly a very hot sector right now, what some people are calling the psychedelic renaissance. But Incannex seems to be approaching this with genuine scientific rigor, not just PR hype. A massive confidence signal came just recently, on January 29th of this year, 2026. They expanded their clinical advisory board with 3 incredibly heavy hitters in the psychiatric world.
Who are we talking about here?
Dr. Murray Stein, Dr. Andrew Cutler, and Dr. Amir Kalali.
Okay, I'll have to take your word for it that those are big names. But why does that actually matter to the retail investor listening to this right now?
You should think of it as a definitive seal of approval from the medical establishment. These guys, Dr. Stein, for example, are absolute titans in academic psychiatry. They have serious lifelong reputations to protect. They simply aren't going to join the board of a fly-by-night shroom stock unless they have looked at the clinical protocols and seen real, defensible scientific merit. It signals to the broader market that the psilocybin program is a serious pharmaceutical endeavor.
Okay, I get it. So we have a sleep apnea pill that could potentially kill the CPAP machine industry, and a psilocybin program backed by heavy hitters. The science sounds great, but now we have to look at the bank account, because this is usually where the biotech story falls apart for investors.
And this is exactly where we need to be brutally honest with anyone looking at this stock. Incannex is heavily pre-revenue.
Just how pre-revenue are we talking?
Well, for the full year of 2025, they brought in about $86,000 in revenue.
86,000. I mean, I know local lemonade stands with better cash flow than that.
Hey, it's actually up over 600% for the previous year.
Right, sure.
But yes, it's completely negligible. On the other side of the ledger, though, their net loss was roughly $46.9 million over the trailing 12 months.
Okay, let's just pause right there and let that sink in. They made 86 grand and they spent roughly 47 million. That is a truly terrifying burn rate. They are basically setting piles of cash on fire every single month.
It definitely looks that way on a balance sheet, but you have to understand that brawn is the engine of the company. Clinical trials are just incredibly expensive. Running a phase 2 or phase 3 trial involves recruiting hundreds of patients across multiple sites, paying doctors, monitoring data for safety. It costs millions upon millions. That $47 million isn't wasted money. It's heavily invested in generating the clinical data we were just talking about.
Sure, but the runway matters, right? If the airplane runs out of fuel before it takes off, it still crashes. How are they keeping the lights on and paying for all this research?
They've had to be very active with their financing. They recently completed a $12.5 million capital raise via an at-the-market offering, or an ATM.
Which means they are just selling new shares directly into the market, which dilutes all the existing shareholders.
Correct, it is dilutive. But they did something else recently that was actually very clever, and it really didn't get enough attention in the retail space. They executed a strategic cancellation of about 50.4% of their Series A warrants.
Warrants. Those are basically IOUs for shares, right?
You can think of them like options that early investors hold to buy stock later at a fixed price. If the stock price goes up, those warrant holders exercise them, which suddenly creates millions of new shares out of thin air. This dilutes everyone else. But even worse, when there are too many warrants outstanding, short sellers will often hammer the stock price down just to keep it below that warrant exercise price. It creates this toxic feedback loop called a death spiral.
Yeah, it basically acts as an artificial ceiling on the stock price. It keeps a lid on any upward momentum.
Exactly. By canceling over half of those outstanding warrants, management essentially removed a massive overhang from the stock. They cleared the skies, so to speak. It's a very shareholder-friendly, defensive maneuver to prevent that death spiral and protect long-term value. It shows management is actually thinking critically about their capital structure, not just the clinical science.
That's a really vital point for investors to understand. It's good financial hygiene. But speaking of their stock structure, we have to address the massive elephant in the room today. The reason my phone notifications have been blowing up all morning, the reverse stock split.
Yes. The 1-for-30 reverse split, announced on February 25th and effective for trading literally today, Friday, February 27th.
1 for 30. That is a drastic ratio. If I held 30 shares yesterday, I only have one today. And the market reaction was brutal. On the announcement alone, the stock dropped 40%.
Why does the market hate reverse splits quite so much?
It's mostly a psychological reaction, but there is a structural reason too. A reverse split of this magnitude is usually done for one reason: to stay compliant with NASDAQ listing rules. You need to keep your minimum bid price above $1 to stay on the exchange. Incannex was trading in the pennies.
So they essentially paste 30 shares together to make the new share price mathematically look higher. It's purely cosmetic. It is entirely cosmetic in terms of market cap. The total value of the company doesn't change one bit. It's like cutting a pizza into 4 giant slices instead of 12 normal ones. You still have the exact same amount of pizza. But retail investors often see it as a glaring sign of weakness. They think, well, the company couldn't get the stock price up naturally through good news, so they forced it. That panic triggers a massive sell-off.
So that 40% drop is basically just a huge vote of no confidence from retail traders.
From retail, yes. But here is the deeper insight you need to consider. There is often a method to this madness. When a stock is trading at 10 cents or 20 cents, it is stuck in what we call the penny stock ghetto. Most large institutional funds, the big money, the pensions, the endowments, are literally forbidden by their own internal charters from buying any stock priced under $5.
They literally aren't allowed to touch it, no matter how good the science is.
They can't touch it. By executing this reverse split, Incannex is forcibly moving the share price up into a range where those institutions can actually buy in. They are making themselves structurally eligible for the big leagues.
Okay, so while the retail traders are panic selling because they hate the split, the company might actually be clearing the runway for big institutional money to enter the stock later on.
That is exactly the bull case for a reverse split, yes. It's short-term psychological pain for long-term institutional investability.
Well, looking at the chart today, the short-term pain is very real. It's been an absolute bloodbath. The stock is down about 59% year-to-date in 2026. It was down over 80% in 2025. On a pre-adjustment equivalent basis, it's trading around 15 cents. I mean, to a lot of people, this chart looks completely dead.
It looks dead to the naked eye, but if you look under the hood at the technicals, it might actually be a zombie getting ready to come back to life. We are seeing some very extreme contrarian signals right now. The RSI, the Relative Strength Index, is currently sitting under 30, and the CCI is under -100.
Translate that into plain English for the non-technical listener out there. What do those numbers actually mean?
It means the stock is mathematically sitting in deeply oversold territory. The technical rubber band has been stretched so far to the downside that the selling pressure is very likely exhausted at this point. Basically, everyone who wanted to panic sell has already sold. The stock is currently priced for absolute maximum pessimism.
And what about the trading volume? Are people just ignoring it?
Not at all. The volume recently surged to over 26 million shares. That is a massive tell. That tells me that for every panicked retail investor fleeing the building, there is a sophisticated buyer on the exact opposite side of that trade, quietly scooping up those shares at a steep discount. You just don't get that kind of volume purely from people selling. Someone is accumulating.
Someone is definitely buying the dip. And I actually saw that Stonegate Capital Partners just updated their analyst coverage on February 18th. What was their take on all this volatility?
They are surprisingly bullish. Their recent report explicitly stated that the current distressed valuation is completely disconnected from the actual clinical progress. They're looking at that 83% reduction in sleep apnea from the phase 2 trial and saying, look, the market is pricing this company as if the drug has already failed, but the clinical data says it's actually working. They gave it an overall sentiment score of neutral to bullish, which is a very strong statement given how ugly the price action has been.
Okay, so let's piece this together. We have a stock that's been beaten down to the absolute basement. We have a technical setup that screams oversold, and they've cleaned up their warrant structure to prevent a death spiral. But a cheap stock can stay cheap forever if nothing actually happens to change the narrative. We need a catalyst. What are we waiting for?
This is the most critical part of the entire analysis. If you're listening to this, this is the timeline you need to write down right now. The next 3 to 4 months are everything for this company.
What exactly is coming?
The top-line data readout from the Phase 23 IHL 42X trial.
This is the sleep apnea pill data.
Yes. We are expecting that highly anticipated data to drop somewhere between April and June of 2026. So Q2.
So it's imminent. We are right on the doorstep.
It is their Super Bowl. If that data comes back positive, if it confirms the strong efficacy and safety we saw in the earlier phase 2 trials, this stock is going to re-rate instantly. And we aren't talking about a modest 10% move here. We are potentially talking about a 50%, maybe even a 100% upward revaluation. Positive phase 3 data is the absolute holy grail in biotech. It transforms the company overnight from a risky science project into a legitimate commercial contender.
Right, the stakes are astronomical. But let's play devil's advocate. What happens if the data is bad?
Then the bear case takes complete control. And it is incredibly ugly.
How ugly are we talking?
If the data is mixed, or if, God forbid, there are unexpected safety issues, or even if the data is just delayed past Q3, the stock could easily drop another 50% from these current levels. You have to understand that the entire current valuation, even beaten down as it is completely propped up by the hope of this specific sleep apnea drug. If that science fails, the floor completely falls out.
And considering they have that $46 million annual burn rate we talked about, they really cannot afford a failure here. If they have to go back to the drawing board, they will be forced to raise more cash immediately, which means a massive, punishing wave of dilution, and current shareholders will just get completely washed out.
Exactly. It is the definition of a binary event. Pass or fail.
Yeah.
Life or death for the current valuation.
Are there any other catalysts on the horizon to cushion the blow, or is the entire company riding purely on this Q2 sleep apnea data?
There are a few secondary catalysts to watch. We will get their Q1 earnings release in late April or early May, which will give us a crucial update on the remaining cash runway. And then, looking a bit further out, in the second half of 2026, we expect to see the interim data from the Phase 2b trial for PSX-001, the psilocybin anxiety program.
Okay, so the psilocybin is essentially the dessert, if the main course goes well.
That's a great way to look at it, yes.
All right, let's summarize the big picture here. We have a deeply distressed clinical stage biotech trying to replace the most universally hated machine in sleep medicine with a simple pill. They have fantastic initial data, they have a terrifying cash burn, but they've actively cleaned up their warrant structure, and they just executed a massive reverse split that terrified retail investors today, but potentially opens the door for institutional money tomorrow.
That is the complete landscape, yes.
So I'm putting you on the spot now. We've looked at the good, the bad, and the very ugly chart. What is your final verdict? How do you score Incannex Healthcare today?
Weighing everything we just discussed, I am giving it a confidence score of 6.5 out of 10.
A 6.5. That's cautiously optimistic, I'd say, but you certainly aren't betting the house on it.
No, absolutely not. I want to be very clear. This is not a safe, buy-and-hold retirement investment. This is a classic, high-risk, high-reward swing trade opportunity.
Break down that swing trade thesis for us. How should someone approach this?
The thesis is that the 1-for-30 reverse split has forcefully reset the technicals. The stock is currently priced for maximum pessimism. It's trading as if the sleep apnea drug has already failed the trial. Because of that, the downside risk from here is actually somewhat limited, simply because it's already down over 80%. There's not much premium left to lose.
Yeah.
But the upside, if that Q2 data readout is positive, the upside is exponential.
So the strategy is essentially buying the ticket now while there's blood in the water, enduring the daily volatility, specifically to catch the anticipated run-up into that data release in April or May.
Exactly. You are tactically positioning yourself ahead of a massive known catalyst. Your target horizon is strictly 3 to 6 months, but you have to be willing to stomach some wild intraday swings. This play is definitely not for the faint of heart.
It's a distressed biotech with a potentially winning lottery ticket in its pocket, just waiting for the numbers to be drawn.
That is the perfect summary of Incannex right now.
Well, it is going to be a fascinating spring for this stock. I will definitely be watching that Q2 data drop very closely. But before we wrap up, I want to leave you, the listener, with a final thought to mull over. We've talked a lot about Incannex combining two existing drugs, dronabinol and acetazolamide, into a single patented pill. What if the massive traditional pharmaceutical companies are deliberately ignoring these kinds of combination therapies simply because they can't easily patent the individual generic components? Does that structural blind spot in Big Pharma's business model leave a multi-billion-dollar gap wide open for agile biotech upstarts like Incannex to swoop in and steal the market? It's something to think about as you watch this sector.
It's a very provocative question, and frankly, it's why the biotech space is so endlessly fascinating. But as always, remember to do your own rigorous due diligence. The biotech sector is the Wild West of the stock market. Never invest money you cannot afford to lose entirely.
Wise words to end on. If you found our analysis of Incannex useful today, please consider subscribing, hitting that like button, and dropping a comment underneath with your thoughts on the stock. See you in the next one.